Welcome to Commodities, and here we're looking at gold, and everything's pretty much going on track. The little ABC that we're looking in here yesterday is just expanded down into the 50% retracement level of this move through here, but still on track here, and we weren't going to go long until we had support on the 1300 here. The move that you can see up through here is only in 3 waves so far, not 5. But we can see the strong third wave in the middle here, and the first and the second. So this is obviously the 4th wave here. So we'll see a 5th wave up through here. So if I can just draw this out through here, so a 5th wave making a new high here, not by much, and then some type of ABC correction, and then a move up from that point there. So you could probably buy on the pullback through here once you recognize or understand or sort of see what's actually going on. But yeah, being long above there, I mean, this move up through here should be roughly the same size as this move through here, but you'll be able to see the structure as it builds. The silver market, while we're here, just on the same sort of pattern as well on the hourly chart here. It hasn't moved up as much as gold, so it's an indication that it will lag, but at some point it will catch up. But gold will have a better range in it. But look, buying here and putting a stop under here would be a bit of a go, because this B wave here, in terms of the A, the B, and the C wave here, in 5 waves, 1, 2, 3, 4, and 5 here. Not a bad picture. So a nice support on 1950 might do the trick there, but don't expect too much from it. The copper market's pulled back a little bit further than I sort of thought it would. I was looking at 308 here, and it's down lower than that at close to 307, and probably got a little tad more to go here. But the pattern's still correct in terms that it's in an A and a B and a C, a 3-wave structure. This move up here is reasonably clear as well, in terms that it's only 3 waves up here. So we'll be looking at a 4th and a 5th wave here. So the distance above, this is a bit of an overshoot pattern where it doesn't actually get sold off at the next level here. Yeah, so it doesn't get the classic trading levels pattern, but it's called the overshoot. So normally the overshoot, the distance above, without stopping here at the number, the distance above is normally the distance that goes below there. So it's kind of intact. The wave 4 just can't breach the top of wave 1 here, but in derivatives, there's only 3 rules in Elliott, and this is the wave 4 overlapping wave 1 is the weakest. So anyway, let's just sort of see how that pans out through here, but all intact. If I got that on little, yeah. So this is the current move down here so far in terms of 5 waves down through here. You can count those there: the 1, 2, 3, 4, and 5. Then the corrective move here, and this one's in 5 as well. A little bit sort of concerning really, because the A wave here in a correction is normally sharper, like down sharper than the last wave, the C wave. The C wave is normally more lazy and more of an angle to the upside, but you can see that it's sort of sharp here, sort of acting like a 3rd wave here in personality terms. So that's a bit of a concern, but there is 5 waves into this point here, so we should have a low in here as such. So a little bit over the target. Things are looking a bit dodgy, but let's just allow it to play out through there. The oil market, we got our bounce. We were talking about this low in here at 130 or somewhere in there yesterday, and you could buy a bounce, expect it to go back to 102. The problem I got here is that I'm not sure if this is the A wave here, then the B wave, then the C wave back up here for wave 4, or if that's not the case, then the other scenario is that this is wave 5 down through to here. So then this is the A wave here, the B wave over here, and the C wave here in 5 waves over here for the alternative count here. So in one way or another, we're going to see sort of bouncing going on through here. But the other main point too is that on the daily chart, this market is deeply oversold. So we can expect bigger bounces to come from this, from this area through here. But one of the important things here, this move here is in 5 waves here. So this does act like a B wave here, coming down quite sharp here. So yeah, anyway, just see how that goes there, and yeah. Yeah, just a little bit sort of tricky, really. Look, if the 101.50 becomes the support, or even the 101.30 becomes a support, you could go long on there if you're scalping during the day, and you should see further upside. There should be some momentum that comes in behind here, but it may not come in until we get more of a bounce down here somewhere. But look, there's nothing really. It's all dangerous territory trading in, a market that's coming down into a large number, and also being in with group 1 as well. So 101, 102 and 103, so basically 1, 2 and 3 in group 1. You always see the price bouncing around these levels, because simply that's where the largest orders are going to be sitting, just psychology. The gas market is on track to push higher, and what we've got here, yesterday we were looking at this being 5 waves up through to here. I didn't really count this little guy in here as such. A bit tricky to read, really, but I can see now that this is a nice 4th wave here, or this may even be up for 1 and back for 2 here, and moving up through here. At worst, we'll see an A and a B and a C come back through here. We know there's good support at here, so we won't see it penetrate this too much through here. So the trade is still long to the upside, and we're looking at $5 up through here, and probably even higher as well. So if you're long there, stay long and keep the stop under the 72 here. Normally it goes at 67, 467 here. If you're going to drop it from 467, then you've got to come down to 463. Right, soybeans, the grains. Okay, so yeah, look, a bit of positive sort of light here in terms. So yesterday we were looking at this move coming up through here on the 1 hour chart, and we were looking at it as a B wave coming up through here, but the situation is that we've got 5 waves now, because we were looking at this as being an A and a B and a C, but we had it as alternative 1, 2 and 3, and we've got the 4th and we've got the 5th wave up here that's actually not finished yet. There will be more to this to go here. This is a nice 3rd wave in here. Drawing tool's not working, but anyway, there'll be top of the 3rd, 4th and 5th up here, so we're not going to miss much anyway. And we'll see once the 5th wave is in place at 1535, 1540 tops, and we'll see an A wave, a B wave and a C wave come back through here. This is the May contract here. But we will start with all the commodities. We'll start looking at the June contracts. Such now, the interesting thing in most cases, the July contracts. In most cases with the grains, the July contract is trading higher than the May contract here. But except in the case of soybeans here, so we've got the July contracts trading lower than the May contract. So it does tell me that we've got a bit of a, if the future is trading at a lower price, then that's the sort of dictating where it's going to be. So I can see the July contracts pushing higher, and we'll see new highs coming in over here with this as well. But we should see it fold back as well. The wheat contracts, now yesterday we were looking at, on the hourly chart here, counting 5 waves up here, and we had our wave 4 here, and we're looking for wave 5 to go up. So wave 5 has started. It's just, I thought it might go to 710, but it might go a little bit higher than that now because of 1, 2, and the 3rd wave here, and then there'll be a 4th and a 5th. So we could get up to 715 or something. So yeah. Yeah, I mean, we're long in this market, and you can be long in here again if you wanted to be, but you know that we've got 2 counts on this. This is still the May contract here, but we'll start looking at any new buying needs to be in July contracts from here on in. But yeah, look, anyway, we'll I want to basically, with all the commodity, all the grains that have moved up, this is their pattern, okay? So don't feel like you're missing anything. Yes, we should have, could have, would have, and done all that sort of stuff down the bottom here. But the thing is that now we need to allow this 5-wave structure to play out in soybeans, wheat, corn, coffee, Sugar's in a different category, but basically we need to allow this to complete here and then look at what type of move we get back. If it's corrective, we'll be looking to buy into that correction, but if it's impulsive, then obviously we won't. So we just need a little bit more time yet, so don't feel like you missed anything. The corn market, the same as well. This is actually the July contracts. I'm going to use the July contracts here for corn, and like I just mentioned with wheat, looking at 5 waves up, and the same with soybeans as well, and the same with wheat as same with corn here as well. So, and I've got this counted a little bit differently now. I'm still looking for this a bit of a change in count. I've just sort of gone back over things and looked at it all, and I'm just calling this up for 1 and back for 2 here. And then this is 1, 2, 3, 4, 5 for 1, back for 2, all the way up for the 3rd, nice and strong, complicated 4th. And this is all a bit complicated through here as well, but we'll call it the 5th wave because it does count reasonably well. Nice strong 3rd wave here, 4th and 5th. But that just leaves us the 3rd wave here, and we've come back for the 4th, and then we're going up for the 5th up through to here. So that's the way I'm sort of looking at it. And would still come back for the A, the B, and the C here. If that's not the case and it continues higher past its 5 waves up here, just like we did with counter with wheat, well then we'll look to go long and continue to move in there. So okay, well that's that, and this is pretty much the same with coffee as well. So with coffee and its little bounce off here, I'm not too sort of worried about it. So far there's only 3 waves up here. If it turns into 5 waves up here, then this 5 waves here will see an ABC correction and then another 5 waves up through there. So if I got this on intraday here, this is 15 minutes here, and it's a July contract. So as you can see, so far this is up for 1, back for 2, and then there's 5 waves in here. It looks like a 3rd wave, 1, 2, 3, 4, 5. And if that's the case, then we will see the 4th wave here, the 5th wave here. If we get those 5 waves here, then we'll see an A and a B and a C, and then you can start buying from this point here. If it fails from here, then that's the A, the B, and the C's we're expecting it, and we'll come back down through here. But so if this occurs, then you'll know to buy, and you'll use the 210 to buy off here on support. Okay, have I got that on a 5-minute chart? Okay, look, there it is, a bit cleaner here as well. So we can see this is up for 1, little A, B, C for 2, and well, this would be the 1s and 2s in here. This will be the 3rd wave here, the 4th and the 5th. So if we see the 4th and the 5th, and then the A, the B, and the C across the 210 here, then you know where we you know where you are here. So yeah, support after a correction here. If you got support, then you go along from that point. Okay, the sugar market, and this is the July contract here. So we're looking at this being a corrective pattern in here, and we're just trying to pin the low here. And as you know, we've sort of looked at this, well, this being the low here, and we're looking for more confirmation now. I mean, this is it. You know, this correction could get bigger and uglier, but we're just trying to nail the low in. So with that case here, this is the count on a 4-hour chart. So we've got wave 2 here. What bugged me about this is that this move up here was never really in a nice 5-wave structure. It's more like in a 3-wave structure. So we thought we'll just wait it out, you know, and see what happens. So then we were looking at this move that's down through here. And so far it's in 3 waves, so it's down for 1, back for 2, and down for 3 here. It could turn into 5, so back for 4 and down for 5 here. But as it stands, it's actually corrective at the moment, so everything's sort of on track. So an A and a B and a C wave here in 5 waves. So if I can just drill in here a little bit further, if I got that on a further chart here. Okay, look, so originally this move up here, we're looking for 5 waves. It doesn't count very well as 5 waves, so that was why I was a bit sort of concerning. But this here, it counts like an A wave, a B wave, and a C wave through to here. But it could also go 1, 2, 3, 4 up to here, and then 5 down into here. Taking this low out here would obviously, well, that makes it bearish at that point there. So, yeah. So, look, as I mentioned, on the positive note, this can be up for wave 1, back for wave 2 here. If this group 2 here on the July contracts, the 1765, 1772 and the 1780 here, if the market can get in here and find support in here, then we know that we'll be going further up from that point, and we'll be looking to add to positions on the 1772 in here. On the May contracts, you'll notice that the support that the market's working through at the moment is on the $17. So a nice solid support on the $17 is another way to look at it as well. But let's see how we go. The most important thing, if that low gets taken out, then we've got a bearish pattern on our hands. It's that simple. The orange juice market, it's moved down further than I would have liked this wave 4 to move down. I still know it's a fourth wave, and I'll get to that in a moment, but a move down here a bit further takes out our stops, and we've got contracts all through here. So it's a bit unfortunate, but what I have learned is that the July contract is trading at 161. So this is the May contract here, and so there's a couple of weeks to go before this changes contract. So because this was in a corrective move down here, it seemed like the old contract, the May contract here, was sold off quite strongly through here, where the July contract, yes, it's been sold off, but it's only sitting on support at 161 up here. And it had this roughly the same high up here at 167, maybe a tad lower, higher, but no, same price basically. So with that in mind, looking at this here, this is just the daily chart here for the July contract. You can see that we've got a nice 5 wave up here. Yeah, so it's a nice structure up here. So the 38.2 retracement level here is at 159. So the market's not even at its 38.2 retracement level here in this contract here. So this is actually holding up really quite well. And when we look into the 4-hour chart here, you can see that it's on its support here at 160 here. Sure, there may be more to this, but what we need to note here is that 2 or 3 weeks before a new contract is to be rolled over, if we're facing a corrective move, then we should roll over those contracts much earlier in the piece. So we'll make a note of that, and that's something that we've learnt here. Just drilling in here a little bit more here into the 1 hour, into the July contracts, you can see that it's all standing up quite nice. That's the 5th wave up here. I haven't labeled that, but this corrective move here may not be finished yet either. There may be more to it here, but it should find support here a little bit, but it technically can come down to the 159. So, and I can see this structure here, 1, 2, 3, 4 and 5 should come down a bit further as well. But anyway, all new buying should be done in the July contracts. So, but we haven't got this complete just yet. All right, well, that's about it. Not a sort of lot to report. I will be using the July charts, and I need to go back over and spend some time on all the grains in terms of trying to sort of see how, in the bigger picture, how they all line up with their wave counts, and try and get them all into sync, because they should be in sync in one way or another. And I need to pull them all together and redo all their wave counts and make adjustments. And because we are looking for buying opportunities soon. All right, cheers.